Hey there, happy Friday, everyone. Today is Friday the 18th of June, 2021. Just doing a trade recap for the week. Pretty short. Really didn't have much in terms of intraday ES trades this week. I did not trade Monday, Tuesday, Wednesday. Wednesday we had that Fed meeting announcement. I typically don't trade that day, and then the Tuesday before is usually slow. And then Monday, my plan was if we had any kind of major gap, I would trade, but we didn't. It was pretty blah, one-to-one breath, super quiet, so wasn't much to do there. I had a couple trades yesterday in the live trading session, and then today um, we have expiration. It's a quadruple witching. I typically don't trade on those days as well, but I did tune in this morning with the sizable gap down. I thought we might get some uh, opportunities, but there was really just a whole bunch of blah. Whenever you have these same size bodies that are just lining up next to each other, red bar, green bar, red bar, green bar, it's just a whole lot of indecision, especially these doji candles as well. So you've got on one hand, big body, red bar, and then a big body, green bar. That signals indecision or a balance. And then over here, you've got doji candles where the open and the close are right near each other. Those signal indecision. My one hope this morning, or my looking at the market breadth and the advanced decline line when we opened, that gave me a little bit of hope that we could go into kind of a dive bomb sell-off because we were really bearish and on both the breadth and the advanced decline line. But even that, I mean, the breadth opened, it was like minus 12 to 1, and now we're sitting at minus 3.5 to 1. The AD line still decently negative, but there's just a whole lot of nothing going on. So I just stayed out of that today. Um, let's go with yesterday's trades, and then we'll talk about a little bit bigger picture stuff. Yesterday, the first one. So I was a little bit conservative yesterday. There were a handful of more setups than I took, but being the first day really of the week for me to be trading, I was just played a little bit conservatively. So you probably had a few more trades. There was a nice long down here off of lows that I ended up passing on. We didn't have a low ticket lows, but it was a fine, valid setup. And anytime, let me go to that one here. Anytime you have a situation where we'll use this for example purposes. Anytime you have a situation where you have a 5-minute candle that breaks its high, so we were in a downtrend, we actually traded cleanly off the first 5-minute halfway back short. That was from the high here down to the swing low. Actually, it wasn't quite the low of the day, but it was pretty dang close. And that one traded pretty harsh right off of the 50% to the negative 23% target. And anytime, if I get to that point, we have a 5-minute candle that breaks its high after you're in a downtrend, or breaks its low after you're in an uptrend, those are good opportunities to look for trades. And I think I was just a little bit distracted at the moment. But you see how the 5-minute candle here, its high gets broken right here. And so on the 5-minute chart, we're breaking the 5-minute candle's high. And on the 512 tick chart, we've broken that high, that's the line here, and then pulled back. We also broke the prior swing high in the 512, and then pulled back to the 50% long. So that was a nice little long setup. Like I said, I didn't take that one, but valid nonetheless. The two that I did take, the first one was a long setup at 51. That was here, low to high. We were bouncing off lows, and we had a pretty tight breath at the time. So my thought was, well, we're not really getting much momentum to the downside. Let's see if we can go from the bottom of the range to the top of the range. We traded up to the negative 23% target. Was able to move my stop up to break even. So just came away with that one on scratch. Didn't quite get a first target hit on that guy. But then the second one was a short, and that was about an hour 10 into the day. And that was just a short off kind of a double top up at highs, like so. So you see on the 5-minute chart the nice clean double top that we had. And again, breadth was pretty balanced. So anytime you go from, anytime you are trading at the top or bottom of the first 30-minute range, there's the bottom, there's the top of the first 30 minutes. Anytime you reapproach that level, you're looking to go, when you're range bound like that with a 1-to-1 breadth, you're looking for the market to just go top of the range to the bottom of the range, bottom of the range to the top of the range, top of the range to the bottom. And that's basically what we did all day, with the exception of that V in the afternoon, which I'll talk a little bit more about here in just a minute. But yeah, so I took that short. It was a 40. Actually, it was a 42.1975. I accidentally had my drawing just not grabbing the high by accident, so I got in at 1950, but really didn't make a difference. And then I just trailed my stop down by trailing the next 61.8. I actually ended up using the extension here because we broke below the negative 61.8 and really got moving fast. And then we were approaching that hour and a half mark, and so I got a little bit aggressive. We came to the opposing long, which was a full halfway back for the day. Got a little bit more aggressive there. But there really wasn't an opportunity to get a really close swing high. Like if you drew up the next retracement, it looked like that. So your stop would have been up at 15. Let me see. So I used the swing high right here. I ended up getting taken out right here because I came in and I just trailed each candle on the way down because we were at the opposing 50% long. So I ended up getting taken out at 1150. That was good for about 8 points. If you were just a little more loose with your stop, keeping it above that swing high, you could have cut that next leg down for another 4 or 5 points, but not a huge deal. Still a nice winner, and that was really it. Those were the only two trades that I had this week as far as ES goes, just because there wasn't much happening. Market's been going sideways and super quiet. That being said, I did have a hedge on the SPY going into the Fed meeting announcement, and typically the Thursday after the Fed meeting, if there's going to be some decisive action, that's when it's going to happen. So seeing as yesterday did not really amount to much, I went ahead and closed my hedge about midday on that sell-off. At the time, it seemed like we could be, gaining some momentum to the downside here. So you see we broke the prior day's low, and I actually used, I don't do this very often, but I actually used the June contract for expiration. So today it was expiring. And the reason I did that was it was dirt cheap when I bought it on Friday of last week, and then the catalyst that I was looking to hedge for was happening on Wednesday, and I was expecting some sort of gap down, if there was going to be one, to occur yesterday. And so I ended up closing it out for a nice little gain, and at the same time, the position that I was hedging, which also doesn't happen very often, was up at the same time. So VUG is the position that I'm hedging in my longer term accounts. That's the fund that I use, just a pretty simple growth ETF, and that had a strong up move, and the hedge in the SPY was down, and so both ended up positive when I closed out the position. So obviously I still have the long. That's not a position that I'm closing out. That's why I add the hedge, but it ended up working out pretty well. Didn't really make sense to hold into expiration today just because if the move was going to happen, I was expecting it to happen yesterday. Usually these expiration days, there's not a monster gap or a sizable gap like we had today. So I probably could have squeaked out a little bit more from it, but because it was in the money, I had a 40, well, I think it was a 422 puts, but not a big deal. Still made money on both ends, so happy with that. Other than that, not a lot going on. As we go into next week, let's look at the other thing. Oh, before we wrap this up, the VIX yesterday really didn't have any reaction. The VIX was down as the market was down, so that was another sign that people just aren't scared. And the Fed came out and said they're going to continue their bond buying and infusing money into the market. So there's just not a lot of opportunity for this market to sell off. So we really need some sort of global catalyst to freak some people out to get a bigger pullback. So you can see on the longer term chart here on the SPY daily, and a decent pullback in the last couple days, at least with today's dip. Not quite getting us to the bottom of the channel, but looking better as far as getting a pullback of some kind. But as you can see, as we look at these prior ones, I mean, we're talking 2, 3 days, 4 days tops, and then we're ripping again. So if you draw the next retracement that happens to line up right about the lows from today, but you'll note that we did not complete to the negative 23 up here of the retracement that's currently in place. So I would leave this one up until you either complete the target or break the 61/8. You can draw up these smaller ones within the larger retracement, but at this point, I mean, if we close anywhere off lows, we should be seeing either a gap up on Monday or buying on Monday. You have this, and it's the same way with the housing market. Any little sign of a pullback, boom, it gets snatched up. Any house that goes out there that might even have a hint of a deal or a discount, boom, it gets snapped up. I mean, there's a lot of money, a lot of people out there with a lot of money, and you also have this interesting dynamic where a lot of the folks who made a lot of money from crypto, who were had their wits about them to at least convert some of it into dollars and spend some of it, or spending the crypto as it is Bitcoin, Ethereum, whatever they have. All of that money, that crypto, whether you think it's some fake bit of magic or not, if you converted it to US dollars, you now have actual dollars in your wallet, in your physical wallet. And so all of that money gets pumped into the market as well. People buying houses, cars, toys, saving, whatever you're doing with it. So that's not something you typically see too often with like this new market that was created, and then poof, all of this cash gets infused into the market as well. So I'm not too skeptical on a major sell-off here unless we get some sort of global catalyst that spooks the markets. But it's looking like 2023 is going to be, when we start seeing some rate hikes. I would guess we get, if the pace of the rising prices and the talk of inflation continues on this path and this trend line, we could probably see some increase in the funds rate sooner than that, and interest rates rising sooner than the end of 2023, but it's still a ways off, and there's still a lot of room to grow. So I hope everyone has a great weekend. If you have questions, drop them in the comments below, and we will talk to you soon.